Hi everyone, a very good afternoon to all of you present here. I'm Nitisha Jain, tax expert associated with Clear, and my area of expertise is income tax. Today we all are here to know about the topic ELSS versus other tax saving investments, how you can make the right choice out of it. So, before starting our session, I would like you to welcome you all who all have joined the session post lunch. We'll try to make the session very interactive one, very useful one for all of you. Meanwhile, during the session, if you have any queries, you can just write down in the chat box. My colleague Nupur is there to answer all your questions over there. And once I'm done with the presentation part, I'll also be taking up your questions at the last. So, without any further delay, let's move towards our today's agenda. What all topics we are going to discuss will be, first of all, we'll be knowing a brief about the ELSS. What is ELSS? Then we'll be seeing the comparison between ELSS versus other tax saving instruments. How you can select the best ELSS funds and what are the best ELSS funds to invest into this 2022 year. After that, employees' perquisites, PF taxations, and at the end, what are the other Chapter 6A deductions also, which will be covering ATC section, ATD. Likewise, all those sections will be discussing one by one. So, moving on to our first topic, that is knowing a brief about ELSS. So, when we embark on an investment journey, you are often confronted with questions about the products that can work best of you. One instrument that probably works on both return and tax saving aspect is equity linked savings scheme, or I can say ELSS. It is a diversified equity scheme that not only it will help you in achieving your long term financial goals, but it will also help you to get a tax deduction benefit of up to rupees 1.5 lakh for your investments under ATC in the Income Tax Act. So ELSS comes with a mandatory lock-in period of 3 years, which means you cannot redeem or switch during this duration. It become extremely important to choose the right scheme for yourself to get the best results. Now, I would like you to throw some points or advantages. What are the top benefits if you are investing into ELSS fund? First of all, will be the equity exposure. Mostly ELSS funds are equity oriented hybrid funds with most of the investment done in the equity and equity related products. So, you might already know the potential of the stock market and how it can help you to generate excellent results on the long term basis. Apart from ELSS funds, there is no other tax saving instrument under ATC which offers such high exposure in equity. So, thus, with ELSS funds, chances of capital appreciation are higher. Then, secondly, all the different tax saving options have their own lock in period. For example, tax saving FDs have a lock in period of 5 years, then PPF with 15 years, NSC with 5 years. As compared to all these options, ELSS funds have the shortest lock in period of 3 years. While this means that you could redeem your fund after 3 years, it is generally recommended that you should remain invested for as long as possible for long term capital growth. Then, next, it also provides the better flexibility. As compared to the other tax saving investment funds like ULIP, you get better flexibility with ELSS funds. Say, for example, a lot of investors, after investing in ULIP, are unhappy with the fund performance. In such cases, the only option they have is to invest in other funds offered which are offered by the particular ULIP. But with ELSS funds, you'll have flexibility to move to the ELSS scheme of any other AMC or even other funds of the same or other AMC without getting into the deal that would last for multiple years. It also have SIP option. Most of the popular tax saving options under ATC requires you to invest a lump sum amount. But with ELSS funds, you get this SIP option with which you can just start investing from as little as rupees 500 per month. And also in a financial year, you can invest up to 1.5 lakh in ELSS funds to gain ATC tax benefit. So you can break this amount into the monthly SIP of 12,500 for a year to gain the tax benefit without investing a lump sum amount. Then, lastly, another ELSS tax saving fund benefit is the ease of starting the investments. Most of the MC now have online portals, right? From where you can begin within minutes. Unlike the other tax saving options, which involve complex paperwork or ELSS investment is easy and very quick. Moreover, after investing, you can also easily track your portfolio performance online. So, to conclude, if you are looking for the best tax saving options under ATC, first understand the benefits which are mentioned thoroughly, and the decisions would definitely be easier. Before investing, make sure that you first try to understand how ELSs work, what are the risks involved in it, how you can avoid any problems in the future. So accordingly, always just spend ample of time to read that offer document before you do the transactions or you just sign that dotted line. First, make a thorough study about all the things which are mentioned in your agreement or whatever. Just have the market study, and then only after that you can invest in this ELSS. Then how you can invest in ELSS will be, you can just invest in ELSS in same way as you invest in any mutual fund. Easiest way is through an online investment service account. You can invest either as a lump sum or via the systematic investment plan route. SIP will ensure regularity and the discipline, and it will also reduce the risk of capital. We can invest as little as rupees 500 in ELSS fund, as I told. So now to give a comparison that how ELSS funds are better as compared to the other tax saving instrument. So in this thing, as we have seen that ELSS funds have a lock-in period of 3 years, and it gives a return up to 10 to 12%. The taxation which will be on this returns will be falling into long-term capital gain taxation. Then the other tax saving instrument, if I talk about, it is tax saving FD. It has a lock-in period of 5 years, but it gives return of 6 to 7% only, and it is taxable at normal income tax slab rates. Then the National Savings Certificate, which is another ATC option, it has also lock-in period of 5 years, and it gives a return up to 7 to 8%, and it is also taxable on the income tax slab rates. Public Provident Fund (PPF) has the highest lock-in period of 15 years, and it gives a return of 7 to 8%. There is no taxation on the returns which you'll be getting from PPF. Then, if I talk about NPS National Pension Scheme, it has a lock-in period up to the age of 60 years, and it will give you a return of 8 to 10%. The taxation which will be on its return will be partially taxable. So, as it is clearly noticeable that ELSS funds are far better than the other tax saving instrument with the lowest lock-in period of 3 years and better returns. They are also tax efficient. So, if you are seeking for a good tax saving investment option, ELSS funds are is a great choice. Now, how you can pick the best options of investments into, yeah, how you can pick the best options of investments. Now, there are some pointers which you have to keep in mind while you are selecting the ELSS in sync with your risk appetite and your financial goals. First one will be the market capitalization composition of the portfolio. So, the ELSS funds are like multiple cap schemes that will consist of mix of small, mid and large capitalization stocks. However, in the case of ELSS, fund houses have the liberty to create a higher concentration in the stock of particular capitalization. ELSS funds with a higher concentration in the large cap stocks is usually more stable in terms of return and risk ratio. On the other hand, it will be having a great concentration in mid or small cap stocks, or comparatively it will be volatile. It may carry higher risk, and at the same time it will have the potential to generate higher return also. Depending on your return requirement and your risk appetite, how you can tolerate the risk, you should select the appropriate mutual fund scheme that can help you to achieve your financial goals on time. It will be totally depending on your risk appetite and your return requirement. Do not see that what the other person or what my colleague or what my friend is investing into. Accordingly, I should also invest into that. Don't do this mistake. Kindly just see your own financial goals, what it is, what at what time you want to invest. Accordingly, make the decision wisely. Then, secondly, you have to understand the concentration risk and diversification. Different ELSS funds adopt different types of strategies for maintaining a balanced portfolio in terms of stock concentration and diversification. Some funds may invest a higher percentage of their overall portfolio in fewer stocks, whereas some may rely on diversified portfolio and invest an almost equal portion in all the stocks in their portfolio. Let's take one example. Say you are having there is a fund A which holds 100 stocks, and 5% of total stock in its portfolio constitute 25% of the entire corpus. Such funds are highly concentrated and it carry a high volatility risk. Let us understand this better by another example. Say there is a fund X which holds a portfolio of 100 stocks and the corpus is evenly distributed in all the stocks. That is a well diversified portfolio. While a highly concentrated portfolio, it carries high risk, and over diversified portfolio often dilutes the return generating capacity of the fund, and it may fail to offer a good return even during a bullish market. So, when selecting an ELSS funds, focus on such schemes which are neither over diversified nor highly concentrated. Simply prefer a fund that has adequately diversified portfolio. Then you have to check the expense ratio of the ELSS fund. Expense ratio, what is that? It is the cost of managing the fund and related operating expenses. Higher expense ratio brings down your return on investments to that extent. So, while you are investing in the ELSS fund, just look for the mutual fund scheme with lower expense ratio, while the overall performance of the fund should be at par or above the category return. Also, you'll have to check the basic parameters. You should check the some crucial basic aspects such as fund's past performance, what was the fund manager's reputation, etc. Like those kind of points. Past performance may always indicate that the future of the fund will be same, but it often helps you in estimating the capability of the fund management under different market conditions. Similarly, if the fund manager continuously performs well for a long time and there is no significant change in fund manager, it also may indicate that such a mutual fund scheme may repeat its performance under the similar market conditions. So, while you are making the choice, just have the analysis of the past performances of that mutual fund or whatever you are investing into, and accordingly make the choice. Then you'll have to compare the ELSS funds with other equity funds which you have invested into. While investing in this ELSS fund, check out your existing investments in the mutual fund and avoid duplicating their portfolio structures and the investment style. Choosing different types of ELSS funds, it can help you to properly diversify and ensure a better return on investments. Finally, if you are new in the mutual fund, then you may consider taking the help of seasoned investment advisor or invest with the help of mutual fund distributor. If you are well versed with the mutual fund world and you can yourself select the right mutual fund scheme, you may prefer a direct investments in the mutual fund. Whatever ELSS scheme you choose, just stick to it for a longer period to create a proper wealth out of it. Then only it will make sense, and you will be eligible to get the highest return from the investments which you are making into. Otherwise, there is long list of options you can invest. There are many options of the investments, we know that, but according to the market studies, according to the past performance of that instrument particularly, we can make the choice that what are the instrument which are meant for us, which we should invest into. Then make the right choice by yourself or taking any help. Then after this, if I talk about some other ELSS funds benefit, so it will also provide a tax reduction up to rupees 1.5 lakh under ATC section. Then these funds will also offer the triple E benefit, which is tax exemption, wealth accumulation, and it has also zero exit load. Further, these funds will invest primarily in the equity market in a diversified manner, which gives the investors a good opportunity to earn the inflation beating returns. So, of all the investment options which are available under ATC, ELSS funds offer the lowest lock-in period. As I said, it is only of the 3 years. After this, coming on to our next topic, that what are the best ELSS funds for this year particularly, which you can invest into, are the Axis Long Term Equity Fund, then Canara Robeco Equity Saver Fund, Miraya Asset Tax Saver Fund, Invesco, then DSP Tax Saver Fund. These are the current top best performing ELSS which you can invest into and maximize your return out of it. Then also, if you want to invest by yourself, then there is a black app of ClearTax. It is available on Google. You can download it from Play Store. So after downloading it, you'll be able to see that it gives that app, black app, gives you a great picture or very simple analysis of the various kind of instruments, like debt instrument, what are the different types of instrument in that particular tab, and how much amount of return those instruments are giving, what are the lock-in periods of that particular instrument, and what will be the minimum investments which are required into that app will help you in making the decisions very easily. And also, using that app, you'll be able to file your own income tax return, uh, ITR 1, like that. Now the income tax has released the other forms, so they'll be releasing it slowly. Once the filing has been started, you can also file your income tax return using that black app. So these all things you can do. Then talking about the valuation of perquisites as our topic concerned. So perquisites, I can say, it is a non-cash benefit which is granted by an employer to the employee. Under the Income Tax Act, perquisite is defined as a benefit which an employee avails of or is entitled to on account of the employee's job or position in the enterprise. So, obtaining the perquisites has important tax consequences for the employee. When any employee obtains perks during the course of employment, the perks is taxable as part of the assessment of the employee. Value of the perquisites received by an employee is included in the salary income of that employee, right? So, on account of that perquisites, the taxable income of the employee may exceed the basic exemption limit. When the taxable income crosses the exemption limit, the requirement of the TDS arises. Then that taxpayer should note that perquisites are a non-cash consideration, whereas the TDS on salary of the employee is a cash withholding. When the income crosses the basic exemption limit and TDS withholding is made, it becomes mandatory for the taxpayer to file an income tax return. Thus, while perquisites offer benefits to the taxpayer, they also come with tax implications. So it is up to the taxpayer to choose between various perquisites, keeping in mind the taxation implications of each of that perks. Now there are some classifications of perquisites. For income tax purpose, they are properly classified into following categories such as perquisites that are taxable only when the employee belongs to a specified group. Secondly, they are taxable in hands of the all categories of the employees. Then, thirdly, if specified security or sweat equity shares transferred or allotted by the employer to the SSE, then if the employer's contribution to the approved superannuation fund to the extent it exceeded rupees 1.5 lakh, then there are some tax-free perquisites also. There are perquisites which are taxable for all categories of the employee. Some of them are the value of rent-free accommodation which are provided to the SSE, value of any concession in matter of rent in respect of any accommodation which is provided to the employee, then value of the employee stock options or sweat equity shares which are allotted or transferred free of cost or at concessional rate of employee. Then last, employer's contribution to the superannuation fund which is not exceeding rupees 1.5 lakh rupees. These all perquisites will form part of the salary, and these all are applicable to all categories of employee, but they are taxable perquisites. Coming on to our next topic, which is about the PF taxation. So, the PF taxation, the EPFO, and organization which manage contributions of employee in-house are looking for information on issues such as withholding the tax liability and the timing of taxation. So there is also ambiguity on whether the taxable portion of interest is required to be offered to tax each year on an accrual basis, or it should be taxed lump sum at the time of withdrawal of the corpus for retirement. The budget for this financial year 2022 had made taxable the interest earned on employees' contribution to Provident Fund if it is in excess of rupees 2.5 lakh a year. This requires splitting of accounts of those employees with an annual contribution in excess of 2.5 lakh beginning from 1st April 2021. One account would house the exempt part of the contribution and the other the taxable portion, which would be in excess of 2.5 lakh. The change was aimed at preventing the higher earners from getting an excessive advantage owing to the tax exempt status of PF. So, individuals who are opting for voluntary provident fund, that is VPF, contributors that take their total annual contribution to over rupees 2.5 lakh are also covered into this, I can say, this amendment. So, the person who are having excess VPF over and above 2.5 lakh limit will also be taxable. That their amount will also be taxable, and the employer who contributes 12% of the basic salary plus TNS allowances to EPF and deduct another 12% from the employee's salary. 8.33% of the employer contribution goes to the employee's pension scheme EPS, which earns no interest. So as far as balance standing to the credit of an employee as on 31st March 2021 is concerned, interest on this non-taxable account will continue to be tax free only. There is no tax liability if you are having excess interest amount up to 31st March 2021 date, then no need to worry, it will not be taxable. But if it is after 1st April 2021, in excess of 2,50,000 amount will be taxable from now onwards. So this was the PF taxation amendment part. Now we'll be discussing about the other tax saving instruments. What are those and how you can get the maximum benefit out of those. So if I talk about the house loan interest thing, uh, if some of the smart hacks how via which you can increase your take home salary, it will include the principal on housing loan component. If you are having a house and you have the housing loan, how you can utilize that loan in reducing your tax liability, we'll be discussing that point. So, buying your own house is many persons' dream if they are living on rent, and we dream that we all should have a house. So, for that purpose, income tax, sorry, Indian government has provided many kind of taxation benefit to the person who are trying to invest in the house property and who are taking a housing loan. So for that purpose, home loan must be taken for purchase or construction of house, and the construction of the house it must be completed within 5 years from the end of financial year in which the loan was taken. If you are paying the EMI for the housing loan, it will consist of two components: interest payment and the principal repayment. So the interest portion of the EMI paid for the year, it can be claimed as deduction from your total income up to rupees maximum 2 lakh, and the maximum deduction for interest paid on self occupied is 2 lakh, but for let out property there is no upper limit for claiming the interest. But the overall loss one can claim under the head of house property is restricted to rupees 2 lakh only. This deduction can be claimed from the year in which the construction of the house is completed. Beside claiming the deduction for principal repayment, deduction for stamp duty and registration charges can also be claimed under ATC, but within the overall limit of 1.5 lakh. It can be claimed only in the year in which all the expenses are incurred. So the interest component will fall under income from house property head up to the limit of 2 lakh rupees, and the principal repayment will be covering under section 80C up to the limit of 1.5 lakh. Then the other chapter 6A deductions. If we talk about under 80C, so in ATC, if you are having any kind of life insurance premium or any other if you are investing into PPF like that, then you can invest. Then you can maximize your tax saving out of this. So if you are having a life insurance premium for yourself, your spouse, or your children, and so the annual premium will be covered under ATC up to the limit of 1.5 lakh. Then if you're having any PPF contribution, that will also form part of ATC, any Sukanya Samriddhi Yojana, National Savings Certificate. Then if you have paid the children tuition fees, so the component of the tuition fees will form part of ATC deduction. No other fees payment will be covered under ATC deduction. Only the children's tuition fee will form part of ATC deduction. Then after this, if you are also having, if you have taken medical insurance policy for yourself, your spouse, or your children, and your age is below 60 years, then you can claim deduction of up to rupees 25,000 overall. But if you have taken medical insurance policy for your senior citizen parents and mean their age is above 60 years, then you can claim deduction up to rupees 50,000 under section 80D. But suppose if you are not having the medical insurance premium for your parents, but you are incurring medical expenditure on their behalf for your senior citizen parents, then also you are eligible to claim deduction up to rupees 50,000 for your senior citizen parents. Apart from this, if you are having any kind of NPS contribution, yes, if you think that you have entirely utilized the limit of ATC, which was 1.5 lakh rupees, and now if you are concerned about your retirement and you're looking forward to plan with the tax saving benefits, then NPS is the best tax saving instrument. NPS is known for its user friendly features only, low cost structure, and flexibility. Here you can invest minimum amount of rupees 6,000 installments or at least rupees 500 or as lump sum. Being the investors, you get to decide how to allocate your money for various kind of investments or corporate bonds like that. Under this section, you can claim any additional self contribution up to rupees 50,000 under 80 1B as NPS benefit. This scheme therefore allows total tax reduction up to rupees 2 lakh. As a pension scheme, it is important for you to continue investing until the age of 60. But if you have been investing for at least 3 years, you may withdraw up to 25% for certain purpose. So there are two primary accounts type under the NPS, that are tier 1 and tier 2. These are the accounts. So the former is the default account while the latter is voluntary addition. Right. This table will explain the two accounts types in detail. Under this, as we can see, that status tier 1 is default and tier 2 is voluntary. Withdrawal from tier 1 account is not permitted, but from tier 2 it is permitted. Then tax exemption. As I said, up to 2 lakh rupees you can claim in tier 1 account. From ATC you can claim 1 lakh 50,000 rupees, and from ATCCD you are eligible to claim extra 50,000 rupees. So altogether you can claim 2 lakh under this account. And in tier 2, 1.5 lakh is eligible for government employees, and for other employees there is no limit, no exemption. Minimum NPS contribution which is required under tier 1 is rupees 500 or 500 or 1000 per annum. But in tier 2 it is 250 rupees only, and there is no maximum limit of NPS contribution in both the accounts. Whatever amount you want to contribute or invest, you can do it without any limit. So these were the bifurcation of the two accounts, how it will help you. Then coming on to I talked about this ATD. Then ATDD, which was medical treatment for handicap dependent. If you are incurring any medical expenditure for any of your handicap dependent, then in that case, if the disability is 40% or more, but it is less than 80%, then you are eligible to get flat deduction up to rupees 75,000. But if disability is 80% or more, then you are eligible to claim flat 1,25,000 deduction. Then 80DDB talks about the medical expenditure on yourself or any of your dependent for the disease which are already specified under this particular section. In this, you are eligible to claim rupees 40,000 or the actual amount, whatever you have paid. If your age is below 60 years, then lower of the two amounts will be eligible for deduction. But if your age is above 60 years, then least of the following will be exempt, which will be 1 lakh rupees or the actual amount which you have paid. Whatever is the lower amount will be allowed as your exemption under 80DDB section. Then if you yourself are suffering from any kind of physical disability, then in that case, in case of physical disability like blindness or mental retardation, flat deduction of 75,000 rupees is eligible. But if it is a severe disability, you are eligible to get flat deduction of 1,25,000 in this case. Then, if you have taken any kind of education loan, then ADE section comes into picture. Education loan will help you not only to finance your foreign studies, but it can help you to save a lot of taxes as well. If you have taken an educational loan and you are repaying the same, then the interest which is paid on that loan is allowed as deduction from your total income under section 80E. However, this deduction is provided only for the interest part of the EMI. There is no tax benefit for the principal part of the EMI. The main thing to focus in this section is that you will be paying the principal and interest part of the loan, right? But the deduction which you will be getting is only of the interest part of the EMI and not for the principal part. But the good thing about this section is that there will be no upper limit on the there will be no limit on the maximum amount which is allowed as deduction. It is available for 8 years starting from the year in which you start repaying the loan or until the interest is fully repaid, whichever is earlier. It should also be noted that if your loan tenure exceeds 8 years, then you cannot claim a deduction for the interest paid beyond 8 years. So it is always advisable that if you are taking an education loan, that should be paid within a period of 8 years so that you can claim the maximum benefit out of it. Otherwise, it will be like after 8 years, you will not be getting any kind of exemption. Then, apart from this, if you are donating any amount, if you are making donation in any kind of charitable organization, then ATG will come into picture. If it is there is a long list of deductions. So if you are donating in any registered charitable organization, some are eligible for 50% donation, some are eligible for 100% donation. That list will be that ATG list will be provided by Nupur in the chat box. She'll provide that. Accordingly, you can see that if you are making any donations, what amount of deduction you are going to get. Then, if you are having any kind of saving bank interest, then up to rupees 10,000 is allowed as deduction under section 80 TTA. For that, first you have to include that interest income under the head income from other sources. After that, if it is exceeding rupees 10,000, say for example, for a year starting from April 1st till 31st March 2022. Say for example, your the financial year was 1st April 2021 till 31st March 2022. In that particular year, your total interest income from saving bank account was rupees 15,000. You have to enter that 15,000 amount under the income from other sources head in the interest income column. And in the deduction part, under section 80 TTA, your 10,000 rupees will be exempted and the remaining 5,000 will be taxable in your total taxable income, whatever will be that 5,000 will be included in that. But if your interest income is 8,000 rupees, then up to 8,000, the entire amount will be exempt under 80 TTA section. If your age is below 60 years, then the limit of interest bank saving interest exemption is rupees 10,000. So this was all about the chapter 6A deductions, about ELSS, how you can make the right choice from the correct app, whatever investments you want to choose. First, make a thorough study about that, make see the past performances of that instrument, accordingly make the right choice out of it. Don't hurry. First, make the entire market analysis, do study, and then invest accordingly in the current year. So this was all about all the topics. Now I'm happy to answer all your questions. I hope Nupur would have answered all the many questions. Yes, you can get the tax exemption on the donations which you are making to the NGOs only if it is the registered charitable organization. Then you can get the donation exemption. Any further questions if you're having, you can please ask. And yes, if you are having any further questions after the session also, you can write to us at support@cleartax.in. This is our support mail ID. Our support team is there to help you out on the mail. Do you have any further questions? From NPS, we can expect around 8 to 10% return. Uh, SS Santosh Kumar, Nupur has already provided the donation link. In this, when you will open this link, you will be able to see there are various kind of organization details over there. Not organization details, the names I mentioned over there. Accordingly, some are eligible for 50% tax deduction and some are eligible for 100% deduction. So it will be it is dependent on you that what amount of donation you are investing into. Accordingly, you will be eligible to get 50% or 100% deduction. Say, for example, if you have invested some amount in PM COVID Relief Fund of say rupees 2,000, then in that case it is eligible for 100% deduction. So you'll be getting entire 2,000 rupees as deduction. There is no maximum limit of this deduction thing. It is 50% or 100%. Any further questions? No problem. You can get entire clarity from this section, from this link of donation, which is already provided in the chat box. Divakar, the lock-in of ELSS will be 3 years. So if you are investing for 20 years, then yeah, as per you can calculate this that from 3 years, if you are just extending that your investment amount, you can withdraw the amount at the end. For donation to political party, there is another section. I'm sending you the link in the chat box. Jagruti, I've shared the link. Okay, so some has asked, what is corporate NPS account? Corporate NPS account means if your employer is contributing an NPS on your behalf, then in that case, section 80 CCD2 will come into picture. That is called as corporate NPS account. No problem, Jagati. I think there are no more questions. All have been answered. Thank you so much, everyone, for joining. I hope this was a useful session for all of you. Thank you so much. Have a great evening.